Taking a look at the state of the restaurant sector, we got shares of Darden, little change today, but they have been outperforming the S&P 500 year to date. For a broader conversation about the dining sector, I want to welcome in RJ Hottovy, head of analytical research, Placer.ai. RJ, thank you so much for joining us today. So we had some results and earnings from Darden, which showed there is still, people are still going out. They are still dining out. We know that you all at Placer.ai are on top of trends and visitation trends, whether we're seeing price-driven fluctuations, et cetera. What does your recent data tell you about what casual dining looks like now?
Yeah, thanks for having me, Diane. Casual dining's actually had a pretty nice start to the spring and an early summer. We saw some disruption right around February and early March as we were getting through the tariff and other macroeconomic news. But since then, we've kind of settled into kind of a normalization or wait and see period for a lot of consumers. And generally speaking, we're looking at visitation trends that are up year over year. Casual dining doing well, fine dining doing well, coffee doing well. QSR is the one area that's a little bit weaker right now. We've seen some at least more competition with value grocers and dollar stores and convenience stores, but by and large, casual dining is pretty strong, and we saw that with the results today.
RJ, when you look at these data points, obviously you have many different things that you're tracking across many different industries. During the pandemic timeframe, many of these restaurants that were able to pivot to takeout options, contact-free things did really well. Then we had the reopening surge, tons of travel. As we're on the other side maybe of that boom, are experiences like going to, maybe a chain restaurant or a fine dining restaurant, is that where we're spending our discretionary money right now based off the trends you're following?
I think there's a bit of that. I think actually for casual dining, it's the value proposition that really is attracting to people right now. On a relative basis, QSR versus casual dining right now, casual dining's actually not a bad value. And I think it echoes what Darden said today, but I think consumers are finding that. What's interesting about the fine dining category is that maybe people are going a little bit less often than they would like, but what we do see with our data is that people are staying longer. And so when they do go out, they're making the most of the experience. We do see that a bit with casual dining as well. Some of that is just, you want to make the most of your experience when you dine out. So I think by and large, people, there is still demand. People want to dine out. Inflation certainly has been a bit of a curtailment, but I think at the end of the day, people still want to do it. And when they do, they spend more time there. And, in some cases, we're seeing average check up as well.
That's what I was going to ask you, RJ. So if they're spending more time there, does it translate to more dollars spent, or is that just, kind of taking up the table?
It depends on the category, to be honest. There has been, I would say, more for the kind of mid-tier players. We have seen that average ticket come down, but the at least the high-end chains have generally held up pretty well on that front. It is interesting to see, and I think what this does show is that we probably in some regards there could be room for expansion for some of these players. Although the other trend we are seeing is that a lot of restaurant chains are chasing population growth right now, and so you've seen really big restaurant booms in a lot of the South and Southeast markets to the point that it's outpacing population growth. So that might be a little bit an area of concern as we look forward, is that all these markets are being chased by the same restaurants and may get really crowded really quick here.
RJ, is there any names within these categories that are standouts, that are maybe familiar brands, that are maybe publicly traded, that your data supports maybe strength?
Yeah, I kind of point to the 4 C's right now. We're looking at across the category. The first would be Chili's. It was the 2024 story for the restaurant industry, and thus far continues to be the 2025 story. Not only did they acquire a lot of visitors last year, those visitors are coming in more frequently. The second C, I would say, would be Cava. Continues to be one of the great stories from a visit per location. I love the fact that they go into new markets, they're seeing really strong results, because that is something we're not seeing from every growth opportunity. The coffee space, I mentioned beverages continue to do very well, and so a name like Dutch Bros in there is a one that is seeing a lot of growth. And then on top of that, chicken, which there really aren't any pure play publicly traded chicken players, but the Chick-fil-A, the Raising Cane's, the Dave's Hot Chicken, all continue to do very well right now.
Okay, RJ, it's so interesting. And what's funny is they have very different charts when it comes to the stocks for the parent company of Chili's versus Cava. Cava's been an underperformer this year across the sector and compared to the S&P 500. RJ, I want to ask you this question. When you think about tariffs and the impact, with restaurants, there's only so much front running you can do of inventory. Yeah. What are you noticing about or hearing from your surveys about how restaurants are managing their input costs and costs of goods?
Yeah, it's a great question. I mean, if nothing else, with our data, we show that consumers are acutely watching for tariff news. We see it a lot of times ahead of the tariff implementation dates. We see visitation trends towards those categories that were facing reciprocal tariffs, or were just represented stock up. Trips like Costco and the warehouse clubs. In terms of the restaurant sector, in terms of what they're looking for, I think a lot of them are just trying to manage as best they can, keep some supply chain options open there. Some of the groups did pull forward a little bit of pricing. Actually, some got had a negative impact when we saw those egg price surcharges from groups like Denny's and Waffle House. It had a negative impact on traffic when they were implemented, and so I think a lot of the restaurants are being a little bit quieter about that front. I think that there's a lot of options out there potentially in terms of sourcing, potentially on entree size that some chains can use. So it'll be interesting to see. A lot of the implementation has not kicked in for the categories that are most exposed for the restaurant category, but it is a development that's going to be interesting to watch because we are dealing with a very price sensitive consumer that has a lot of options, frankly, between value grocery, dollar stores, and others right now where they get their food.
RJ, thank you so much for this conversation today. Our thanks to RJ Hottovy, head of analytical research, Placer.ai.